All right, what's up, everybody? Hopefully, everybody's having a great weekend. I know it was a 3-day weekend and 4-day weekend almost seems like, and it's almost like we need to be trading today, right? And today is Monday, and the markets are closed, but the futures are still going, and we're just waiting, I guess, now. So, the market offers tons of opportunities, guys, and just know that you're not really missing out on anything. It's open all year until they're no longer available to us. But as of right now, everything is still available, and there's tons of ways that we can make money, right? Now, the one thing I do want to talk about today, guys, is just the futures, breaking down the market in general. Not so much give a weekly watch list, but the importance of understanding like what's ahead of us and what we're facing with the charts and what they're telling us, right? So with ES, NQ, RTY, the Dow, gold, and oil, and the VIX, and the bonds, the 10-year bonds right here, the Treasury, the 10 years, TNX. If you guys don't know, please check it out. So there's quite a bit of things happening, and the last time we talked about the /ES, right? We talked about the breakdown here, and a lot of people were saying that it's a rising wedge, and people have this pattern here, and the minute that we break down, it's going to create a break of pattern, a break of trend. Basically, it's what it is. And you know that I always trade supply and demand. It's one of the biggest things that we look for. So when you look at a pattern and you have supply builds and you have demand builds, whichever way it may be, it's still going to benefit and confirm a lot of the movement. So in this case, like what we talked about the supply that was built. The supply is already built at an all-time high at the top of that trend line that everybody has. And then we ended up breaking down the pattern. Okay, so that's number one. That's very, very important to understand. What did we do? We come and tested the 50% retracement of the bearish positions here. And the past, the past couple of weeks here, we rejected pretty heavily. So if these candles would have closed up here, I think we would have had some type of bullish case scenario here, but we never did. And we did get a little bearish here. So I actually, when I ended up taking a position down here at this bottom, I ended up taking my profits here like 45.50 for like 125%, which was amazing for the QQQ. And this is ES, but I did it for NQ. And then here I switched everything to mindset about being bearish, which is kind of difficult because we've been on this bull run ever since COVID. The whole COVID drop, and then we recovered, V-shaped recovery, and started making these all-time highs. And then we are now finally starting to trend down. So accepting that we are in a bearish market, it's okay. So remember that you guys got to be able to alternate and adjust yourself with the market. The market will run up, it will run down, it will run sideways, with or without you. If you missed it, it doesn't matter. It will still keep on going. If you caught it, it don't matter because it's still going to keep on going regardless. So we do have a bearish market, guys, and the strong confirmation here is on the breakdown. The 50% retracement did not hold. The 50% retracement, this yellow box, meaning that the bears are in control. On top of that, we have news, war-based news. And you guys remember that the the last few videos that I talked about, I always said like the only thing that's really going to drop this market right now, and that can potentially drop it and continue to drop it, is going to be any type of war news. And unfortunately, that's kind of what's happening. I don't wish war upon anything or anything negative for the families and things like that, but we have to accept that that's what the market condition is at. Now, there's going to be a lot of news, guys, and there's going to be a lot of hype and a lot of fear. Whatever you do, do not chase the news. I want you guys to follow the charts regardless. Okay, still respect the supports, the supports and resistance levels, and understand where you're getting in and where you're getting out. I will be making another video on shorting the tops. I've made a video on buying the dip for you guys. But now I'm going to make a video of shorting the tops in the next one, so look out for that video. What we have here with ES on the 4-hour chart, well, let's go look at the weekly first real quick. I have a target on this bottom, right? So most of you guys always wonder, like, where's the next support, or where is the next level we're going to kind of stall at. It's the same level right here. All right, this 42.24, 42.25, around 42 to 42.25. All right, just remember those numbers. And then the bottom of that is this right here, 41.45, 41.40. This would be your low. Okay, and then we have another low right here on this wick. So basically the buyers at one point that were right here on this base, they showed up around 40. What is this, 40.30? Just rounding off whole numbers, 40.30, all the way up to this 41.40. Okay, so from this little piece to here, this is where all the buyers showed up. All right, so just make it clear, guys, that these were orders that were placed, and that's where we kind of the dip was bought up right here, and then it confirmed here, and then it created this space for another leg up, and then that's where we ended up here with that 50% retracement. So it kind of just matches everything. Okay, so this is the next bottom I'm looking for. So if you're looking at SPY, let me just show you. It's going to be right here, this bottom piece. Okay, so 416 to 420, that's going to be that target. All right, so I actually do have 420 puts. I posted that in the servers, and hopefully everybody took a piece of that. But you never know. Well, we might wake up at all-time highs tomorrow. Like, who knows? Okay, these markets have been a little wild. They've been crazy. They've been aggressive. A lot of up and down movements, and it's just been chaotic. So, right now, I think the safest thing to be trading is puts. If you're going to be trading calls, make sure that you're in and out of those positions, and you're not bag holding something if it goes the opposite direction. Once it starts to go the opposite direction, then you're just bag holding, thinking that you're buying the bottom, but you're not. This market is volatile. Let me just show you. The VIX, you guys know, it's all about characteristics, and the VIX is still high. So we're kind of just changing characteristics here for the VIX because of the fear in the market. All this war stuff that's driving it up and down, and because it's driving it up and down, and because we're in a bearish market, because everything is breaking down stock wise, like PayPal, SQ, Facebook, Netflix. I mean, there's tons of tickers out there that are breaking down some crazy levels, and there's no buying the dip just yet, right? But here you can kind of see that the characteristics have changed right here, and the fear is increasing. So with the fear increasing, the VIX characteristic changes. So once this changes, it's creating a different trend and accepting that we are in a bearish market. So the same spot as I identified the VIX, this is the same spot on ES where the market is turning bearish. Okay, I don't like giving you guys a bearish talk because, like I said, tomorrow, I mean, tomorrow or by the end of the week, we can have this like huge bullish candle, and then, somebody says that we're not going to war, and then this happens, and but you got to remember that follow the trend. The minute it changes, you have to know exactly where it's going to change. For me, for anything to go bullish at all, I would have to go over this piece right here, about 45.50 and 45. If we can create candles above here, then that's when I will change everything and say, hey, we're going bullish, guys. There's no war. Everything was just news, and whatever it was. Either way, there's a lot of stuff going on with inflation, which inflation that you should know kind of affects the XLF. And the XLF is kind of a good thing, which is the financials. And it's actually holding up the financials in general. But because of the market is coming down, you want to make sure that you take a look at some of those charts. And some of these charts are almost looking like they're going to create some bearish movements here, right? So just be aware. And then tech, guys, the biggest thing about tech is the fact that we have the interest rates. The interest rates are hitting a lot of the bigger names. And as you can see here, we did break down. So confirm the supply, and we're trending on down. And then this is like the last support that you have in the market. We broke down Friday overnight, opened up, and then today we're coming dropping back down, and we're just probably gonna keep on breaking lower. But tech is the one thing that's getting hit on the interest rate, so the big names are getting hit the most. Okay, so let's go look at the weekly, and again, guys, look, it looks like it broke a nice pattern here. It finally broke that trend line, confirmed 50% retracements. The bearish are still there. Everything that has to do with a bearish position on tech is still dropping on down. Like I said, a lot of stocks, guys, if you guys see from the rejection, a lot of those stocks couldn't break above, like Apple, Amazon, Microsoft. You know, some of these tickers couldn't break above. So because we couldn't break above and the bearish um, position stepped in, these players are now driving it down. And then now the supports or the demands, they're not holding and creating that nice downtrend. So where's the next piece for NQ? Below this 140. Okay, well, kind of sucks that the candle already started, but I would say this 137.12, basically the bottom of this wick right here. You're gonna look for psychologically 135, okay, but you want to look for this piece 133.64, okay, and then you're gonna look for this piece right here. All right, you see how like these candle bodies on the weekly kind of just consolidated here and then ran up. So right here, we were kind of fighting. We have wicks on the top, wicks on the bottom. The base here is where you're going to point as a target. So this would be your target 120, 126.70, and then that 1300. That's going to be your target for the end of the week. Okay. I don't expect anything bullish, guys. Gotta be honest with you. I'm not leaning bias or anything like that, but I'm not expecting bullish sentiment whatsoever in the market. I think the market is built on too much confirmations that everything is so bearish. So your mindset and everything just has to go with the flow. Okay, you don't want to fight this trend. You don't want to go against it. As the last thing you should be doing, especially right now with with the war. With the war and then the interest rates and then the inflation, and it's just so on and so forth, right? So we're going to look for this bottom piece 134 psychologically, and then as it drops down, guys, remember that you want to go by the hundreds. 136, 134, 132, 13, 128, 126, 70. You want to try to go by the hundreds for NQ. And as this thing is dropping down, you should be looking at tickers like Amazon. I think Amazon has a little more room to the downside as well. This is actually a good trade to the downside. If this thing breaks on Monday, this thing has potential to drop down to this 29 and 28.60 area, all the way to 27.50. As crazy as that sounds, there's a lot of good potential for this to play the put side. Same thing for Amazon. Like I said earlier, if you guys were to check out all the bearish, the confirmations of the bearish side, look how we couldn't break above. Look how we couldn't break above, and then we just rallied on down, and we're still coming down, guys. So I'm looking for 164, even 158 down at this bottom for Apple. It's a small ticker, so I think anybody can play this. If you have a big account, go ahead and feel free to play Amazon. We do have a 4-day week, guys, so it's going to be very short, and the moves may not be as aggressive, but we definitely do have a trend in general, just in the market. This trend is down. Until that changes, I'm still staying bearish and I'm still shorting tops, right? So let's talk about why RTY, sorry, not the Dow. RTY small caps, guys. You guys know that we traded this in the past, and this was like the last line of support right here. These wicks, these buyers never showed up, and again, just to confirm the rejection here, the 50% retrace is right there. And then now we're just trending on down. Okay, so all my alerts are going to be on the bottom. There's really no true support right here at all, anywhere whatsoever. So this can just literally keep on dropping on down to the low of, as crazy as this sounds, way down here, 1750. Just give it that whole number, or just give it that 18. If it keeps breaking 17 all the way down to this 159, basically the 16. And that can be an aggressive sell-off. Okay, so I'm not saying that this is going to be by the end of the week, but definitely something to look forward to if you guys trade puts. So RTY, basically IWM, okay? So if you guys do trade this, go on the 4-hour. And you can see here that the last line of support basically is here. There's really no base down here, so I will look for this piece right here. 1953 and then 1967. This would be your last line of defense. Breaking below that, then you're just gonna have to trail it every 50 to 25 points. That's the way that RTY moves. It's not a big mover, but definitely if you look at IWM, it's a decent mover, okay? So you'll be trading IWM. Your target's gonna be right here, 194, 190 by the end of the week, potentially, if it keeps cracking on down, right? So why do I feel so comfortable, trading puts and being bearish? If you take a look at gold, in the past, I've told you guys that this is a safe asset to go to. And usually when there's anything that has to do with, basically things that are at war, anything that's going to affect the stock market, a lot of investors like to get into something that's going to be safe, considered a safe asset. And metals, basically gold, was trading right here in such a long time that, we were just waiting for the breakouts. You can see here that it ran nicely and it finally hit this all-time high, and then it finally found support right here, from this base right here, right? And then created a bigger base. So we traded a range for, quite some time here. And then we're finally breaking out, basically confirming that that range was an accumulation phase, a demand with a catalyst being backed for the breakout to the top. So now it's telling me that somebody out there was already loading up on gold and they were ready for this market, because gold is a safe asset. It's more like a hedge, if that's what you want to call it. And seeing that the circumstances where we're at now, gold is being, trending up and it's being treated that way. So that's what I'm looking for. And this is like my indication, confirmation that, we're still in a bearish market and gold is still a safer asset. So if you're looking to trade gold, look for GLD. I believe so. Yeah, GLD, look for 180, even 190. I think JNUG as well. I know some people like to trade smaller tickers. So JNUG and I think NUG. NUGT. Yeah, NUGT would be the other one. So there's a lot of stuff that you guys can trade as long as you guys are looking for gold. You want something safer, you want to trade some calls, go look for GOD calls, but just make sure you follow /GC. As for oil, guys, I don't know how bad the war stuff is going to affect the oil. I would really keep my eyes on it, but this is just trending. Okay, so whatever dip you guys see, continue to buy the dips on oil. And gas prices in general are just going up like crazy right now. I'm in California and I'm paying about $5.35 per gallon for the premium for the Mercedes. And it's just, it's intense, guys. Like, you're spending over $100 just to fill up your gas tank on a Mercedes. Like, it sounds ridiculous, but we know why. We know that the oil is trending, so it's it provides a healthy market. It's what I'm saying. And the healthiness doesn't always have to be bullish. It can be a nice trend in the market. So it balances it out in general, where you can play calls in the market still, and you can still play puts. You play calls on oil, play calls on GLD, and you play puts on SPY, IWM, QQQ, and you have a well-balanced portfolio. You can also trade SQQQ. Okay, this is the inverse of the Q, so QQQ. So it's the inverse, and you can basically follow just one future, which would be the NQ. But giving you guys a great explanation on some of this that you guys can keep on trading. So with that, you guys know that the bonds are going up. If you guys don't know, these numbers, as long as they go up, it's affecting tech. Usually, if this has a nice strong green day, tech is the one with the red day normally. Okay, not all the time, but something to keep a lookout on, right? So keep on lookout on something like that. So I also want to give you guys a couple tickers that I have on my personal watch list. Facebook. Hopefully everything made sense for you guys too. Want to give you guys a little more insight on the futures, on the way that the ES moving, the NQ, RTY, gold, oil, and the way that it's being used with the VIX as well. So here we have a nice falling wedge for Facebook, and really it's every base that is being created. I just want to show you guys. Look what happens every time that we create some type of base. And we just staircase on down. So there's really no point in looking for a bullish position, especially the way that the futures are going, just making lower lows from Friday's close. And it's probably going to drop on more. Look for 200, look for 195, look for 190. If we do get a bullish scenario on Facebook, it's going to be short-lived. And if it does have one, if it breaks above this falling wedge and retail crew comes in and eats it up like crazy, I am looking to short the top. Okay, if I see any huge green candle right now in the market, I'm going to short it, but you'll guys see why in the next video. Netflix is another one that I personally like. It hasn't really found any true direction in the markets, and I like that. I like that it's accumulating here, and I want you guys to remember that the last time there was actually some good news, there was some famous guy, whoever he is, some big investor. I don't even know his name, and I don't care who he is, but this guy ended up buying tons of shares down here, and that's why we rallied on up like this for Netflix. So there's a lot of hype behind it. I don't care if he bought any, okay? He's not paying my bills, and I'm not profiting off what he is doing, whoever this guy is. I just know that there's a lot of accumulation here on Netflix, and if this thing gives up this 387, just the low of the day, on this day right here, 385, I'm gonna start looking for put plays because this is not going to hold. So no matter what this guy ended up doing, I'm buying shares over here at this level. I don't care. I'm still gonna look for this thing to drop down, or I'm gonna look for a nice pop to the top. If you guys know Netflix after that earnings, this thing got rejected here, 50% drop of this huge earnings play, and then it kept on dropping down to this 351. So now we're just accumulating, which is amazing, and I'm gonna look out for the play on this one, right? So this is something to look out for. I think this is worth the patience and the waiting to play a nice setup in the markets. So if this market continues to break on down, it's probably going to carry some weight for Netflix and give it that reason and that motive to keep on breaking to the downside, and look for 360 by the end of the week. If it wants to keep on dropping, then look for 350, 146. Other than that, wait for the break, guys. All right. PayPal is another one that I actually want to show you guys as well. Look at this previous weekly chart. Okay, I know the bottom of the base is like right here, the 72 and 78 and 93, and then we have this right here. Okay, so I'm going to show you guys all this 100 level. It's a psychological number. It's the level where we kind of went sideways for such a long time right here. Back in, what is this, 2021? Yeah, 2021, maybe around there, or 2019. Yeah, well, anyways, yeah. Oh, 2020. This is 2020 right here. 20, 21, 22. Okay. So around this time, we kind of accumulated right here for PayPal, and then we finally had broken up all the way to this 120. And then from the 120, a year later, we ended up cracking up to the top. So we're back at that same spot. And I know SQ has earnings, but if anything, guys, I think PayPal is worth watching down at these levels to see like what it's going to do, how it's going to react. If buyers are going to step into this PayPal as a value stock or not, who knows? I know the market is red, but if you're going to trade calls on anything, I think the risk to reward for PayPal just makes sense. And it could have a couple green days here, and they don't have to be that big. I'm not saying that there's going to be a huge reversal, but just something to look out for, to keep in mind that if you don't know what to trade, if everything's just so volatile and there are no setups out there, come and look for PayPal and just use the pre-market level, guys. You guys know that there's a video, day trading strategies, and it gives you the basic information that you will need to day trade the pre-market levels and how to just chart, you know, basic stuff and scalp in and out trades. So I would recommend, you know, looking for PayPal calls if that's what you want to look for. I don't know what that was, but yeah, I'm gonna look for. I have alerts here at like this 100 level, so I'll see what PayPal does. I think I will break down PayPal during the week and send it out on Instagram or the servers or anything just like that. But those are just a couple, guys. And remember, some of these levels, I'm going to give you guys the ES level. So anything below 43 is going to be bearish. We start breaking 42.50, it's going to drop even further. 42.50, after 42.50, guys, when you guys see these movements for ES, look for every 50 points. So every 50 points you start trailing, and you set trail stops. The minute it goes over those 50 points, look for the next 50, and then trail stop at every 100 or every 80 points. Okay, I know it sounds crazy, and I know it sounds aggressive, but that's just the way that the movements are right now. And it's a 4-day week, so be careful on your trading. Be wise, manage your risk, guys. Don't over position size, and do not get biased that everything is going to come crashing down. This market can turn on you real fast. So if I'm bearish, that's okay. If this thing, like I said, if it changes trend on Wednesday or even Thursday, I'm changing with the trend too. I'm not sitting here and saying that I'm going to stay bearish. I will follow this trend all the way. This level here, if it breaks down, I'm bearish. If we go back above, I'm bullish. Like, that's the way that I'm going to treat this market moving forward. And that's the way that all you should treat it. Okay, adjust with it, follow its trend. Don't get biased, guys. Don't over position, and don't go heavy on anything that you don't understand. Don't try to make tons of money on these big red candles or these big green candles. Don't get overexcited thinking that we're going to collapse. Don't get overexcited that everything's going to be bullish. Just be patient and be in and out of these positions, guys. Try not to swing what you can't handle. And please do your due diligence before you get biased on anything. All right. Can't stress it enough in this video to tell you guys to not get biased. All right. Follow the trend. Don't allow the fear and the news to move you. Use it as a tool, not as a confirmation to validate your bag holding. Okay. So please keep that in mind. So I'll leave you guys with that. And I will bring up a next video on how to short the tops, and I will show you guys exactly where some of these pivot points are going to be for some tickers. All right, so good luck, guys. I will see you guys in the next video. See you guys next week for a weekly watch list. And yeah, stay green, everybody.